So there's an old saying in the financial markets, and that is sell in May and go away. Maybe you've heard about this before, but I want to have a look at what this means to Bitcoin. Do the statistics stack up? Should we be selling in May and going away? What does it mean exactly? And when should you buy back in? Which markets has it worked on? And essentially, what do those stats show? That's what we've got coming up in today's video. Hit the like, subscribe to the channel. If you have been following for some time and you're wanting to get your teeth sunk into something more substantial for your trading portfolios, TIA Premium is on sale this week. There will be a link in the top of the video description. I'll talk about that more in the video. But for now, what the hell is sell in May and go away? Well, as AI for Google suggests or says here, strategy is based on historic observations that stock markets tend to underperform from May to October compared to the period from November to April. So essentially, this is the 1st of May through to the 31st of October, and you would buy again on the 1st of November and hold for that next 6 months. So does that mean that we should be selling? Well, the suggestion here, and I've got plenty more data to get through, but the suggestion here is that it underperforms. It doesn't mean that it is going to be a negative month. It just underperforms compared to the next 6-month period. And that 6-month period also involves the November to December, which is essentially your Christmas rally. And then you've also generally got another rally sometime in Q1. Doesn't mean that it always works out. Of course, that's part of the statistics. But just looking at these two periods, that's what this meaning here is: sell in May and go away. This period underperforms, and the next 6 months is a much better performance. Now, there is also another theory, and you can go back and test any of these theories to find out which ones work for you, because at the end of the day, it's pretty hard to stay in the market 24/7, 365. It does get draining. Maybe you've come to see this over the last couple of months or years if you've been trading Bitcoin or cryptocurrencies. Essentially, maybe you would look for one of the worst months and get out at that month and take a break. And so often you'll see this happen through the summer months, at least for the Northern Hemisphere, that sort of sometimes from May, June, July, August, some of those don't necessarily perform too well to the long side, to the upside of the market, which is another reason why we might be trying to get in earlier here. And this is for May. Just get out of the market, take a break, and then move on to something else. Like take a break, have your holidays, and then come back nice and fresh for the remainder of the year, which typically does relatively well. And that's what this shows here with the better performance from that November to April period. So for Bitcoin, I've gone in and plugged this in to get some of those statistics up nice and quickly for us from ChatGPT, and I'll show you what this looks like on the chart. Average returns are approximately 53%. So this is now for Bitcoin, and this is for the period of sell in May and go away. So we just looked at what that means. May 1st to 31st of October, obviously buy back on the 1st of November. What does that period look like for Bitcoin if you were to hold May 1st to November 1st? The average return, approximately 53%. So your portfolio is going up approximately 53%. But of course, we've got the positive and negative years. The median return, roughly about 33%. So that's over a 6-month period. Positive years, 9 out of 12. And this goes back to 2013. And negative years, 3 out of 12. The data indicates that historically, Bitcoin has often experienced gains between May and November, challenging the traditional sell in May, yada, yada, yada. So what does this look like on the chart? Well, let's take a look. Essentially, we got 2024. There is your May 1st. And there is the 1st of November, up 16%, up 18% in 2023. In 2022, which was the bear market year, it was down 45%. The year before, so the bull market, was 64 up, 64% positive. Year before that, in 2020, was 60% positive. Year before that, you had 73% positive. The year before that was the bear market year, and it was a negative, 31, 32%. Now we get back into 2017 and we got to switch the chart to logarithmic because of just how extreme the moves were in the last couple of months. Okay, so May to November was up 379%. So this was for the final year of that bull market cycle. Then 2016 up 55%. 2015, so the first year for that bull market where the low came in January, you got 33% up. And 2014 was another bear market year, and that was down. Call it 46%. So if you take out just the bear market years, you've got 2014, 2018, 2022. Well, then you get a 100% hit rate that it is much better to be holding through May into that November period. And that would then increase the averages as well, increase the median, and it would just obviously cut out those significant drawdowns. So provided, and that's always the coin toss here, provided this isn't the start of a bear market, then this would be a good period to be holding from here through to November. This current month is the 7th largest month in history. From 2021 through to now, you've had bars of around 28 to 32-ish thousand dollars. February is shown to have some pretty significant price ranges in the month. This one, however, April, 6th or 7th largest in its history. But the difference here for April is that we had a huge flush out to the downside, hitting 74,000 and then the reversal. So typically you would see at least a move higher. So we've got 18 hours to go. The top at the moment is 95,800. I'd say at some point in May, you would at least get a move to the upside. Let's draw this on the chart. So you get a little bit of a breakout to the upside. And even if the bar ended up somewhere within this particular range, it would still be an up bar. So we're trying to look at what happens for May, but more importantly, what about the rest of quarter two, and of course the first half of 2025, something a little bit further out than just 1 month. In other videos, we've looked at invalidation levels to the downside. At the moment, we're very much leaning on the bullish side because of the overbalances in price, the overbalances in time, the breaks of the 50% level, the breaks of swings as well, that it looks like there's a continuation. And this period, whether it's an April top here because we now have a swing in the chart, whether it's a May top that potentially comes in, that becomes, if that becomes a complacency bounce and we get a lower swing top on the monthly, then that would basically be some of our earlier warning signs if we were to start to see this area break down. So somewhere around the high 70s to low 80s, if this was a lower high forming on the macro chart here. So for now, things are still seeming on the positive side. And we're also getting to the stock market as well, which has had an absolute monstrous bounce. One of the, I think is the largest month in history with a huge hammer candle, or what we call with the bars, a key reversal. Huge spike down, huge bounce out, which could lead to further upside here for Bitcoin as well. Quarterlies and the monthly forward returns for BTC have worked out relatively well. You've got April being a green a month. I can't see this falling into a red month. I think it's pretty logical at this point. Anyway, leave it at that. 15% up for April, few hours to go. And that would now put April as one of the best performing months in history. 73% returns for April in the green, 73 for February, and also 73 for October. But we're interested in what's coming up next. In May, June, basically a coin toss. July also at 60%, so basically a coin toss. Then you got these two, which are pretty bad, August, September, and then things start to turn around for October and November, flipping back to a coin toss for December. Okay, so through to quarter two, to finish off quarter two in the first half of 2025, unfortunately, basically a coin toss. May hasn't had the best run over the last 5 years. 2024 was a positive month, but it was within a trend. So May could end up being an up month, higher highs, higher lows, but still end up red, but that's still potentially positive for the rest of quarter two, which could then flip the charts around for June, July, August, which essentially show up as coin tosses. To me, is just more part of a consolidation period if you're just looking at the probabilities. Of course, if we see the breakout, some closes above around 105, going to be much better for the remainder of this bull market, and it could get higher relatively quickly considering how little time is left when you look at the overall cycle. And if there's 4 to 6 months, and we've been going for 2.5 years already since the low in November 2022, well, time is of the essence. Bitcoin on the 3-month chart closed out March as red. Here we are at April as green. And the history has shown that each bull market has consisted of 3, sometimes, well, once 4 red quarters. So generally 3 red quarters. Once it's had 4 red quarters. This time we've got our 3, that's 3 red quarters already. And if time is running out and if there's only 4 to 6 months left, it doesn't really allow another red month to occur. and for the market to really pump too much, for it to pump up after that red quarter, I should say. So we're at a green quarter so far. May can come back down. Unless we get a lower swing top, it seems unlikely that we're going to get a red quarter at this stage, because it'd have to close back below $82,500. Stranger things have happened, of course, but if it did close under that, then you'd probably be thinking that this run is more or less over, or you've got maybe one quarter to make any sort of gains to the upside. So each of the previous cycles have had 11 bars, 12 bars, 12 bars. That is quarters, of course. 11 quarters would take us out to Q3 of 2025, which also lines up with the Microstrategy theory. And that theory is that Microstrategy is playing a similar game to what happened in the last cycle. Take a few of these lines off. The last cycle, Microstrategy peaked in February 2021 and then put in a lower high when Bitcoin put in a higher high, basically put in its final all-time high, and that was November 2021. Now we find ourselves at November 2024 being the all-time high. The price has obviously pulled back. It was ridiculous, went absolutely crazy, pulled right back. And this month, with one more trading day to go, it's still at a lower volume than the previous month. Slightly higher than the month that will basically put in a double bottom, but it hasn't necessarily taken off just yet. And in terms of the price ranges here, if you were to see a close above 388, that is going to be pretty good for MicroStrategy to at least come back and attempt 440 to 460, in which case it is still a lower high at that point. And if we're looking at it for a time frame towards the end of the cycle, that's coming in at around August. So we're looking somewhere around Q3. Not saying, and I have to always emphasize this, it's not to say that the cycle will end in Q3. It's to have a look at the cycle and see what the strength, or where the strength and the weaknesses lie, and what the pattern looks like at that time. If we're seeing closes above resistance levels, well, then that's stronger and things are different. They're changing from previous cycles where we saw weakness there. You can see the swings continued up, but at a very weak fashion, and continue to fail at around that $86 to $90 level. This time we've got a couple of numbers to play with, roughly around 400, and then the next more significant level is around 440 to 460. So far, it still hasn't broken above those levels. Roughly 4 to 6 months towards the end of this cycle, leading into late Q3 or early Q4. USDT dominance is also not giving too many signals away here. The one thing I will point out is, well, two things: the volume and the swings, giving us the lower highs and lower lows. That's a good thing for the bulls. So the bulls for Bitcoin and crypto, this is the dominance. So basically, where is the money sitting on the sidelines? It's in stablecoins. This is on a longer term basis, and we'll come back to the short term stuff on the channel in future updates as well. But the first thing was those lower swing highs, good signs for the Bitcoin crypto bulls. But not the greatest sign is still this volume. You've got high volume printed around the lows where we got this bounce. And last cycle, you got high volume printed around the lows and then the bounce. Then the market got carried away and went to new all-time highs. That's for BTC, but it wasn't by much. And you can see that the volume was really starting to die off here. It wasn't as convincing as that first move when everything really took off in the first half of 2021. Similar sort of thing here, except like we just saw, the lower highs, whereas in this case, it was a higher high. So that was a bit of some weakness forming there. This time, however, 3.7% is a really key area, and that breakdown would be potentially your fourth time through. If you guys remember that rule that we've used many times before, that one can lead to a very significant move. If it breaks through on the fourth attempt, there's attempt 1 at 3.7%. There's attempt 2, 3.79%. There's attempt 3 at 3.71%. Should this happen over the coming months, that could lead to a very fast move for Bitcoin and cryptos up to some lofty heights, primarily the stronger cryptos, if you can find those. But of course, BTC being in the strongest position, a lot of that money could be going towards, a lot of these stablecoins could be going into BTC, and then that could lead to that final blow off top move. Is that blow off top hundreds of a percent above the current high? I entirely doubt it. It could be some of the price ranges that we've looked at previously on the channel using our extensions. I'll cover that in the next videos coming up. So make sure you like and subscribe to the channel. And that's a great segue to TIA Premium Sale. That is coming out tomorrow. So make sure you're on the email list, link in the top of the video description. Here are some of the comments as well that you can read that have been posted from our members. Dan Sham has 3x'd his entire retirement fund, SMSF in Australia, or a retirement fund for you guys in the US. At some point, it's important to say, you know what? I'm more than happy with my return investment. This is coming from real people making real gains on their portfolio. I'm not talking about some of those lofty crap things that we hear about, everyone making millions and millions. This is like actual real trading that's going on and real plans that people are working with. So that's TIA Premium. Check the links out in the video description. The sale is only on for the next 3 days. So if you want to get your plans together to navigate the end of the cycle towards that peak and then the correction, that's a place to do it. Speaking of the cycles, looking at the composite here, predictive cycles for the Dow Jones. We're going to look at the S&P 500 as well, which has had a very, very significant month thus far. Just a recap, as I've put it in many other videos, May, June, looks like we at least have a correction in this at some point. Where exactly, I'm looking at this being the end of June, and there might be a smaller one within May, as we can see here on the red line. This is basically your 20-year cycle, looking at what happened in 2005 leading into that final peak as well. We've had a pretty significant decline already. August will be another period to watch if we can get through the next few months relatively unscathed. The forward returns now for the S&P 500. April's had a relatively positive streak over many, many years. This month is slightly in the red, but I think you could say you'd almost consider it a green month considering where it has come from. This has been one of the largest bars, if not, I think it's the second largest bar in history, 941 points. And the only one to beat it, I think, was the COVID dump, 963 points here. What also happened this month was multiple monthly swing low breakdowns, and that doesn't happen very often at all in bull markets. You can see this bar, this is April, took out the August low, took out the April low of 2024, so exactly 12 months ago, and it's had a very significant close higher. Well, at least at this stage, it's still sitting above its 50%. So a close above 5,500 points is going to be relatively strong moving forward, and we might start to see another nice green month there for May. May's had a very, very solid streak for the stock market over the last 12 years, going back to 2013, a couple of red ones there. And if we look at the overall history back to 1900, basically a coin toss, 58%. But I'm looking at the recent history here for this cycle, and it's done pretty well. I think the most important part here is what is it coming off the back of? And it's coming off the back of a very significant decline with a pretty strong close so far. Okay, 15 hours to go. Should we get this 5,500 points? Pretty strong close. But the big thing here is that in bull markets, it doesn't often happen that you see multiple monthly swing lows get taken out. It's basically run the stops on many of these lows. In the case of COVID, it took out 1, 2, 3, 4 swing lows. In this case, it took out 2 swing lows, and March took out one of those as well. So it's kind of a rare occurrence once the market gets going to take out these monthly swing lows. And of course, it happened off the back of Trump doing what he does best, causing all sorts of commotions and then backing down on it. And that's why we find ourselves back where we are here at 5,500 points. Now, the significance of this bar here is a hammer pattern for the candle lovers among us. As I said, with our bar patterns, we call this a key reversal because it looks like a key. The important thing to note here is that it's a reversal pattern no matter which chart you're looking at. You're looking at bars, you're looking at candles. Either way, it has a name for it, and it is a reversal pattern. And when you see these come at the potentially at the end, we don't know if this is the end yet, but assuming this is the end and it comes from a downtrend and then reverses, very strong probabilities that you will eventually see some higher prices from that previous high. So the previous high is 57.73, probably going to see something above 5,800 points. You see one here back in August that was within a trend. It put in a swing low. August bounced or hit low and then bounced pretty hard to close higher, and you saw increasing prices take any of the number of examples going back, couple back here, this one here you call your hammer or your doji here, and big strong closes above. Another one happening here in June. This is on a monthly chart too, so much longer term time frame. And for one more example, you've got October 2014. So took out some of the swing lows, big move to the downside, big bounce back, and closed higher. And then of course the market continued higher. Yeah, for several months, but at the end of the day, that is still a reversal signal. So there are chances, much higher probabilities that we're going to see higher prices through May. I suspect it's also going to follow through to Bitcoin as well. I've got the short-term analysis coming up with the next video, so stay tuned to the channel, like, subscribe, and I'll also check out the short-term for the stock markets and this huge important close here for the US dollar on the monthly chart coming right up. All right, guys, I'll see you guys in the next video. Till then, take care and peace out.